Hello everyone. In short, last night three things made the US market to close overwhelmingly positive, and in that two of them got the potential to do the complete global momentum trend reversal. So, let's see what are all those in detail. First, on Friday, London Stock Exchange Group released a report about S&P 500. Again, I read that on the weekend itself. As usual, market didn't react for that on Friday, but during the weekend it got the huge attention. And that's also the reason, despite closing super negative on Friday, Monday morning US future market opened and traded positive. Basically, lot of times I told about it. Nifty is made up of 50 stocks and S&P 500 is made up of 500 stocks in the predefined weighted average. How individual stocks got the fundamentals like earnings, P/E ratio, etc. S&P 500 index also got those. Ultimately, at the end, after being volatile for various reasons, those valuations always come back for its fundamentals. So that's what exactly happened last night. I mean, at present, global momentum or mainly US market is negative due to this Middle East conflict escalation and also because of this high treasury bond yield in the second quarter. I mean, on the June quarter, year-on-year basis, S&P 500 stocks earnings as a cumulative, it declined over 2.8%. For example, last quarter 10-year bond yield was around 4%. For that, S&P 500 earnings declined 2.8%. So only market feared when treasury yield increased near 5% in this September-October period. However, now as per London Stock Exchange Group report, so far till last Wednesday, October 25th, based on actual results from some of the S&P 500 companies that have reported in the third quarter, it increased 2.6% year-on-year basis. So, in second quarter, for all S&P 500 companies, it decreased 2.8%. In the third quarter, for partial number of companies' earnings increased 2.6%. On top of that, for all 500 companies, London Stock Exchange Group expects the S&P 500 earnings to increase 4.3%. That's the first market impacting report that can potentially trend reverse the global momentum. Then the second, in the last few weeks, crude oil is trading at premium since there was a possible and expecting the disruption in oil supply from Middle East. As a consequence, which can impact some countries' whole economics as well. But again, there was a report released during the weekend that there was no ship traffic disruption in either Mediterranean Sea nor the Red Sea. Because of this no ship movement disruption, oil erased its conflict premium and lost over 4% yesterday. At the time of this video, WTI crude trading at $82.5 per barrel and Brent crude trading at $86.5 per barrel. Again, along with the positive of oil drop, no ship movement disruption means no major economic disruption. So if this sustains, this can be a second potential trend reversal. Finally, from its recent peak in July, both S&P 500 and Nasdaq corrected over 10%. So that also created the short covering before the Fed interest decision on coming Wednesday. So all these made the US market to close super duper positive. At the end, Dow Jones rallied 1.58%, S&P 500 up by 1.2% and Nasdaq increased 1.16%. In case of VIX, after reaching over 21 last week, it dropped over 7% and moved below 20. However, this positivity was not transferred to GIFT Nifty. At early morning today, GIFT Nifty closed at 19,225. At present, it got the premium of 7,200 points. So, based on that, it's indicating flat to negative opening. Regarding Indian ADR, both banks closed positive of over 1.5% and both IT closed positive of 0.5%. If we take the direct value, banks looks super positive and IT looks okay positive. But as I always say, if you do the complete arbitrage analysis, both banks and IT stocks indicates only 0.3 to 0.5% positive. So that's what happened in the global market. Let's discuss the stock sector specific. First, about quarterly results, Marico's profit increased over 17% in line with the estimation. However, their revenue dropped marginally for the consecutive quarter. So we can say the results as mixed. In case of DLF, their net profit increased 30% and it did beat the analyst estimation. Here, unlike Marico, DLF revenue increased marginally compared to a year ago. However, it's over 10% down compared to analyst estimation. So again, it's mixed as well. So the only everything positive on the quarterly results was TVS Motors. Their revenue increased near 13% and profit increased over 30%. Even the margin improved. So that's about the quarterly results. Anyway, moving on. In case of institutional activities, I don't know what to say. Again, FIA was net sellers, then sold for 1760 crore rupees, whereas DIA supported the market. The net bought for near 1330 crore rupees. Then, as per stock open interest, SBI Cards, Petronet LNG, Coromandel International, Britannia, AU Small Finance Bank and Bosch got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, its DLF, JK Cement, Hindalco, ONGC and Indus Tower got an increase in open interest with a positive price close, indicating long build-up. As a summary, US market closed overwhelmingly positive. All three major index increased over 1%, especially Dow Jones, which increased over 500 points. For some reason, I'm guessing because of the technical strong resistance at 19,220 to 19,250 zone, that US market positivity was not at all transferred to GIFT Nifty. Anyway, based on today early morning close, GIFT Nifty is indicating a flat to negative opening. However, all four major Indian ADRs, Infosys, Wipro, HDFC Bank and ICICI Bank, all indicating the positive arbitrage of 0.3 to 0.5%. Even Reliance Industries in India, it closed positive of near 2%. On top of that, in GDR, it closed near 4% positive. So I'm not sure how Nifty will be flat, especially approximate 40% of the index heavyweight stocks clearly showing the signs of positive trade today, which itself equates to near 80 to 100 points. Let's see. Just one more info. At present, US future market is trading around very much flat. Then about the things to look out. Today, L&T, Airtel, Tata Consumer, GAIL India, Indian Oil Corporation, Adani Total Gas and Birla Soft are some of the major Indian companies' earnings results are scheduled released today. Regarding macro, early morning before our market opening, Japanese central bank interest rate decision is due, so that can influence the market if there was any surprise means. In addition, Chinese PMI data and Japanese jobs data are scheduled to release. During our market hours, France GDP and Germany retail sales is due at around 12 pm. Then in the aftermarket hours, Europe's consumer inflation is due. From the US side, employment wage increase, housing inflation and Consumer Board's consumer confidence data are some of the important macro we need to keep an eye out today. Coming to technical, yesterday Nifty opened flat and it hit an intraday low of 18,940. But after initial hour of selling pressure, it gained all its lost points and extended its positive trade and closed near the day's high. Thus, on the daily chart, it formed the bullish candlestick pattern with long lower shadow, indicating support-based buying. However, it now approaching the crucial resistance zone 19,160 to 19,220. As I said in the last pre-market video, the resistance is in the form of hourly upper Bollinger Band and 40-hour exponential moving average. On the downside, a breach below 18,940 can lead to start of the next leg of the fall. In terms of levels, 19,180 to 19,220 shall act as the support zone, while 18,950 to 18,930 shall act as the immediate support zone. In case of Bank Nifty, it also continued with the pullback and claimed above the psychological level of 43,000. However, it also now approaching resistance zone 43,150 to 43,300 in the form of crucial Fibonacci retracement levels, and the hourly upper Bollinger Band is placed. So better be cautious. In terms of options open interest data, on the call side, the maximum open interest was at 19,500 strike, followed by 19,200 and 19,400 strikes, with new maximum call option writing at 19,100 strike, then 19,300 strike. Hence, from the options data, it's indicating the resistance at 19,200 to 19,300 area. Then on the put side, the maximum open interest was visible at 19,000 strike, followed by 19,100 strike, with new maximum put option writing at 19,000 strike, then 19,100 strike. So 19,000 to 19,100 is the immediate support zone. Similarly, for Bank Nifty, the support zone is between 42,500 and 42,700. On the flip side, the critical resistance is at 43,500. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.